Duncan, this week, my little guy, Logan, turned 3 years old. He got some checks, and I deposited them into his liftoff account. You know, and you know what? I also sprinkled a little bit on top. On his dad, right? I got him a birthday present.
You didn't take a cut.
I did not. Ooh. Not only did I not take a cut, I even sprinkled in some on top of my regular scheduled monthly payments. He'll thank me later. So if you want to invest alongside Logan, alongside Kobe, alongside myself, go to liftoffinvest.com.
JC Parets. JC Parets in the house. Fan favorite. Do you know your fan favorite?
I mean, they either love me or hate me, right?
Dude,
is it polarizing?
Yeah.
We do shows with like somebody that has nothing to do with anything to do with you. And in the comments, like, where's JC?
No, people love you.
They love you.
All right.
If anyone doesn't like you, has bad taste.
Well, listen, I appreciate that. Thanks, guys. Shout out to the Ritholtz Wealth Management YouTube channel followers.
Yeah,
right?
let me just show you this. I forgot to show you this. So I've got a Discord channel for my animal spirits guys. This dude yesterday yells in JC voice, quote, "The charts are the charts."
Yeah.
People love
I'm telling you, you have a following, and you have a following amongst our following, because I think what you do when you come here is you don't equivocate, you don't hedge.
He does what he does.
This is what I think, and I could change my mind, but right now this is what it is, and this is what it's based on. A lot of people have opinions but can't tell you what they're based on, and then a lot of people have like a half opinion, and they don't want to really give you the full opinion because they don't want to be held to it. So I think you do a really good job at that.
Well, thank you.
I think that's an accurate description of why people love you.
I mean, yeah, I guess. I mean, you know, I tell it like it is. I mean, because you know why? Because I'm not going to tell you stories. Like, I'm not Mother Goose. Like, it's just a price. It talks about only facts here, right? So, you know, it's hard to argue with me if all I'm talking is factual, right? Am I wrong?
It's hard to argue. Wait, hold on. It's hard to argue with me.
Because I only say the truth.
Because I only say, no, because all I have is facts.
That's it. It's facts only. Am I wrong?
No, you're actually not wrong. It would be very hard to argue with you because
Right.
those are the facts. Let me give you an intro. JC is the founder and CEO of AllStarCharts.com, which is a research platform dedicated to technical analysis across a spectrum of asset classes and geographies. How many charts do you look at on a weekly basis?
5,000.
It's got to be, right?
Yeah, 5,000.
Because you're doing every commodity, every market, every factor within the markets. You're doing individual stocks. You're doing rates, and I mean, it's
Currencies. Intermarket. What aren't you looking
What
at?
happens? Do you ever
Whatever's not liquid, I don't look at.
Do you ever get to a point where you're just like, all right, half of this shit is not worth my time, or is it like I don't know which half?
When you start going through charts, and I mean, I could draw most of them for you at this point, you know what to look for. So like, if there are certain markets that I know are messy because they've been messy, like I'm not really going to spend too much time in
Got
there.
it.
I spend more time when things are like off, when like, hey, if this is happening and this is happening, this should be happening, but it's not. So what's going on in there? And I'll dive deeper in there. So that's really where I spend most of my time, when something doesn't add up.
Is that what you would call an inflection, or what?
Like a
what would you-
divergence.
a divergence.
Yeah, you know, like just making up an example. In 2018, U.S. 10-year yield hit 3%, broke out above 3%, but then the copper-gold ratio is making lower highs. Regional banks were underperforming REITs. So in other words, the stock market and the commodities market were not confirming the bond market. So it was like something funky is going on here. As it turns out, the bond market was wrong. The commodities market and the stock market was right, and yields fell apart from there. So it's just like a classic example of the intermarket relationships not adding up, and that itself is the signal.
So that will, when you're going through 5,000 charts, something like that will catch your eye, and then that'll force you to spend time on it. Then there's like a million charts that are in the middle of the range. Nothing's really going on with
Another
them.
great example, this summer, this spring, everything's falling apart, everything's making new lows. Chinese internet bottomed in March. Chinese internet bottomed in March?
Yeah.
Really? That doesn't add up. Like, that doesn't make any sense at all. Like, if crypto's falling apart, growth stocks are falling apart, Kathy Wood's going to jail, like, all those things are happening. Why did Chinese internet bottom 6 months ago? You know,
Right.
like, that's just something that doesn't add up. There's something there. There's something funky there. I think that's part of the reason why I think that we are in a bottoming process. The worst is behind us, and the risk for investors is not being long enough. I think the weight of the evidence points to that.
Okay.
So you think June was the bottom?
I do.
So you're now a contrarian.
Am I?
Yeah.
I think so, yeah.
Most people think,
Most people think there's a retest, at least.
Well, I think
it's mixed. I think
we've already seen some retests, like in communications, for example, in social media. We've already seen those retests.
Cruises.
And then you're going to have some sectors of the market that don't retest. You're going to have some indexes that retest, some don't. And then you're going to have some that come nowhere near it. And those will be areas that we are focused on showing relative strength. Things like utilities, things like energy, obviously. The areas that stay as far away from those lows as possible.
Those might not be the best trades off the lows, but those are like the highest probability intermediate term trades?
Well, you get the rotation, right? So off the lows, the worst, most beat up stuff is going to bounce the most.
It's going to go up 20%.
So the average stock in the NASDAQ bounced over 40%. The average stock in the NASDAQ. But they were the ones hit the hardest.
They were down 70.
Right. Yeah, so did energy bounce that much? Of course not. Right.
It didn't have that much to bounce.
Right.
Got it. Okay. All right. So
you know what I think about them? Not that anybody cares, but Snap. They had 20% layoffs yesterday. You showed me the news today.
Yeah.
Stock's up 7% today.
Well, I'll tell you something else, and it's bigger than
Wall Street likes layoffs.
Hold on, let me tell you something. It's bigger than Snap. It's the fact that Snap, social media as an industry group index, SOCL, communications as the worst sector of last year, the worst one this year, just the worst of the worst. Have you noticed that none of them are making new lows? None of them. So to quote, shout out Luis Yamada, JC, they have to stop going down before they can start going up.
That's true. Right? That's true. That's a fact.
Facts
That's
only.
A fact.
Shout out Luis Yamada.
What's in that?
In Big Lebowski.
What's in that sector? It's Facebook, Netflix.
Oh, wait, look at Meta. You think this bottom holds? Because that
Google's in communications.
Does this bottom hold on Facebook?
We have a risk reversal on Facebook, actually, so we are betting very aggressively that it is.
So I said to Josh the other day, I said, this is a classic JC. If it does break down on a failed basis...
Well, we're already in. So we're betting that it does hold the lows. We actually sold puts naked, took that money, bought out of the money calls, going out to, I think, October. Sean is helps us with the execution on the strikes and whatnot.
If Facebook does hold, I feel like that's an important stock.
But it's right there, though. It's right on the edge.
It's bigger than, you're not thinking fourth dimensionally.
Of course
right?
not.
Back to the Future, right? You like that? It's that these are the worst ones, right? And they're not making new lows. These are the worst
What if I
names.
said not yet?
Fine.
Yeah.
So if the world is coming to an end, Kathy Wood's going to jail.
Hold on.
Whoa.
What are we accusing Kathy Wood of?
No one's accusing her of anything, but like
let's use a different.
No, hold on. A different
metaphor.
The perma bear.
Metaphorically,
it's just a philosophy of perma bears who think the world's going to come to an end. That's like part of their theory.
That's childish.
No, I know, understand. Yeah. So I don't mean to pick on Kathy. I think the opposite. In fact, we're buying these stocks, right? So if the culprits are the ARK stocks, the Kathy Wood stocks. Those are the culprits. Those are the ones that peaked in February of last year, right? Those are the first ones that started going down. Chinese internet, the growth stocks, biotech, small cap growth, all of those peaked. Remember, everybody had a SPAC, right? That's February of 2021. So if those stocks, if the market's going to roll over, S&P 500 is going to crash, the world's coming to an end, all of those things that you hear, if that's going to happen, those are going to be the first ones to break down and make new lows. Like, these are financials of 07.
ARK just started buying NVIDIA, and of course, NVIDIA is down a quick 20% immediately.
They're not all moving the same, though. DocuSign and Zoom did, in fact, make new lows, just today. But a lot of them aren't. Square, for example,
but NVIDIA, AMD were dragging the SOX down. I think the SOX is going to violate the June low.
Semis look terrible.
I think semis are like extremely important to tech and to the Qs.
Yeah, but if interest rates are going up, semis are going to suck.
Okay, so that
and tech.
So that group making a new low below the June low is only relevant to that group?
New lows and new relative lows. So it's not just
relative to what? Relative
to the overall market. Yeah. So you have semiconductors underperforming, making new lows. That makes perfect sense in a rising rate environment. That's if that wasn't happening, that would be odd.
So we could have those stocks in a downtrend. NVIDIA is a $400 billion market cap. Intel's $120. We could have AMD's pretty big, not that big, but we can have those stocks crashing through the June lows and still be intact on the NASDAQ overall?
No, I don't think so. I think if those are all collapsing and completing tops, it's going to make it tough. But I think they can continue to underperform. I mean, remember 2004, 05, 06? The market did great. Tech stocks were an afterthought. Interest rates were going up. We're in that kind of environment, I think.
So I want to get to your charts right off the bat because this is like one of my favorite things that we do here, and I always learn so much. Do you have a particular order? Are these all set up, or
F***ing take him. Let's just go.
let's just f***ing go? What do you
Yeah,
think?
yeah. I say let's fucking go.
All right, I like it. I like it.
Very confident in my assertion.
Thank you, Ben. Okay,
Oh, is Ben here?
no.
Oh, you pressed the button. I'm like,
Yeah.
wait, what?
Let's start from the
All
beginning.
right, let's go. This is the NASDAQ Composite, and what average
This
drawdown
f***ing
of
bullshit
that?
again.
This is
Next
the
chart.
average. The average drawdown.
Why do you
on the
hate
Nas-
next
Why do you
chart.
hate this chart,
Why do you hate
Michael?
this chart?
This is JC's obsessed with February 21. Keep going. Keep going.
I wouldn't say I'm obsessed with it.
He literally is. He's leading with this chart.
Well,
He told you the market peaked in February 2021.
Oh, I want- you
You
need-
were not ready to hear that at
you
the
were
time.
right. This is like a year ago or more.
He's gonna show you this chart in 10 years.
This is gonna be an arrow. February of 2021.
Oh my god. JC's gonna show you this chart every year.
All right, what are
All
we
right,
looking at?
so the average stock on the Nasdaq fell 43%. Next chart.
no, hold on. No, wait. Fine. That was a good chart.
Oh wow.
This is Ritholtzy, right? Isn't this Ritholtzy?
Yes.
Yes.
We like it.
Yeah.
We like
see?
the chart.
See, I know my audience.
So this is we gotta describe for people that aren't looking at this. This is the S&P 500 with the 10-month exponential.
Why do
moving
you use
average.
the EMA instead of the SMA?
It's a little quicker.
Okay.
But the SMA is going to give you pretty much the same signals. Yeah. And it's a little more efficient. When you look at the annualized returns and the volatility, the EMA is going to be a little better because it's a little quicker. So it doesn't make that big of a deal, but yeah.
What are you telling us here?
Well, I mean, this is the oldest trend following strategy ever.
Yeah.
Right? Like I think it's hilarious that I get I'm gonna shut this down. I think it's hilarious that I get people are like, oh, this is the JC indicator. It's like, first of all, this has been existed since way before JC was born. This is, in my opinion, the oldest trend following system that I know of that exists. You take a 10-month moving average. The S&P 500 closes above it, you stay long, or you get long if you're not.
I think like Meb.
He made it famous.
Yeah.
He made it
Meb
famous.
Favor made
was
this
07.
famous in like
07.
07.
Sounds like Meb.
And then it worked. Like a quote unquote, had you followed it into 08, you
got you
avoided
out.
everything.
Yeah.
Hey, we were talking about Supmeyer's chart the other day. He looked at the 200 week. Is that too long term?
I mean, it is for me.
Yeah.
Like, how many years is that? 4 years?
it's-
It's a lot. I mean, it's like a 4-year cycle. It's not. I get it.
He's like, he used this to say we're in a cyclical bull within a secular bear and then used the 200 week.
Yeah.
We're above the 200 week.
But below the 10 months. All right, so what does this tell you, JC?
Well, listen, I don't necessarily follow this to a T. I don't have a specific part of my portfolio that follows this. It's more of just like one more input. And then in April, we closed below the 10-month exponential moving average. So, in case you hadn't heard, we're not in a bull market. We're not in an uptrend, whatever it is. And that still hasn't changed. So it's not like my life's going to change and I'm going to flip the book long if we close above the moving average. Like that's not how I roll. It's just one of 5,000 charts and
Can I
inputs
just
that
say one
look
thing
at.
for you? So you think the lowest, you happen to think the lowest, and however, I know that if you're wrong, you will change your mind. If the evidence shows that you're wrong, you'll change your mind.
Obviously.
Obviously.
I ask you a different
No,
question.
but that's not obvious because a lot of people don't.
Oh, that's their problem.
So this is an exponential moving average, which means it's giving more weight to the more recent months.
Yes.
Yeah.
Is it true that there's less likely to be a flattened 200-day moving average using the EMA versus the SMA?
I don't know. I haven't done that math. It's not going to change that much.
Hey, you know how I know
Because
we're
with an SMA, though, you could have no trend. You could have a flat, but with the EMA, if you're overweighting more recent months,
it's not that different.
It wouldn't be that different?
The
not
bottom line is this: if you're going to use
Oh,
use a moving average, a daily moving average, it should be an anchored VWAP, not a simple moving
so
average.
now we're negatively sloped in addition to being below, because the above below game could get really stupid in a flat market.
Yeah.
Like, this month we're bullish, next month we're bearish because it's below. But below a falling 200-day
It's not where you want to be.
EMA, to me, is more noteworthy.
To
What do
me,
you-
all
what do you
this
think?
this just points to that if we believe that we are in a bottoming process, and I do believe that, this is part of that process. Exactly what you were pointing out.
Hey, JC, I know we're not in a bull market. I was looking this morning. There are 80 stocks that are 20% below their 200-day moving average in the S&P 500. There are only 6 stocks that are 20% above their 200-day moving average. And it's
Yeah.
like the most boring names in the world.
Yeah.
And accidental.
Yeah, I mean, listen, 200 days, it's not perfect, obviously. There's 252
Well, whatever,
days.
nothing is.
Yeah, nothing is. But it gives you a pretty good idea as to what, because if you're above a 200-day moving average,
It's easier to make money on
You're
the long
probably
side.
not in a downtrend, right? It's probably easier
Yeah,
to make
that's
money.
it.
Exactly right. And if you're above a rising 200-day moving average, you're probably not in a downtrend. It's, right? So, it just goes both ways. And that's sort of how I think about it.
Yesterday was the 100th day for the market below the 200-day. which is a longer stretch than anything other than like the financial crisis.
Yeah.
So this is like a way longer period of time below than COVID lockdowns.
Anything.
Well,
Really,
that was a quick one. We're
even the trade war.
we're 18 months into this one.
Right. Okay. But
No, we're not.
Yes.
No, but we're not 18.
We are.
But I'm saying the S&P being in a downtrend for more than 100 days in and of itself, to me, is notable because that's enough time for psychology to shift.
Josh, when did the S&P 500 peak? I know JC's not an S&P guy.
Most stocks peaked in February of 2021.
Next chart.
By the time
Next
the
chart.
S&P 500 peaked, almost all of the components had already
true.
peaked.
Peak Thanksgiving. But anyway, that to me is
peaked in January.
That to me is notable. What before we move to this next chart,
what's notable?
just the length of time
it's been a
to be
minute.
spending beneath the 200-day is enough time for people's attitudes to and now like the V-shaped thing, like nobody's even looking for it anymore, which probably means we're going to have one. But
Yeah, and again, to your point, I think it's even longer than that, right?
Dude,
So while you're right.
yeah, there are people that own stocks that have been going down
Dude,
for
the
18
V is
months.
over.
Right.
The
I
V
agree.
is invalidated. It doesn't matter if you go to new highs. The V is over.
Yeah, even if you
It doesn't
go
matter.
right to new highs right now, it wouldn't matter. Okay.
What are we looking at? Oh, this is good.
So we had 37 consecutive weeks where there were more stocks making new lows than new highs, and in bull markets, you see the exact opposite of that.
Again, the longest period since the
Right.
GFC. This is a great chart.
So
I like your style.
We turned blue, and
I
actually
love these sailboat charts.
This is great.
we had shout out Willie Delwich
I
and,
like
and
that
Grant.
he made it Nick's colors. We appreciate
This
that.
is very good.
Yep.
All right, so this is consecutive weeks with the New York Stock Exchange and NASDAQ.
Where there's more new
new
lows.
highs or new lows.
More
And-
new lows and new highs.
So we had 37 straight weeks,
Of more lows than highs. Yeah, I mean.
Hey, wait a minute. Is that blue right there?
right? We turned slightly blue for 2 weeks and then turned back down.
So,
yesterday,
but
last
stupid
week.
question. Like obviously, if the last example you could find of this is 09, and we're almost getting to that length of time.
Well, we stopped. Their streak
That's
was
blue.
over.
Yeah, we got
Yeah,
we
we got two blue weeks and then we rolled over again.
That's called a winning streak.
well, so
no, because look, you have these back to back. You got a little bit of blue in when the hell even?
yeah,
was
but we
that?
could start a new streak
That was, part of the
potentially.
bottom.
And if we do start a new streak, then
I don't
it's
wanna
probably
hear
going to be
about
a pretty bad
I don't wanna hear
scenario.
about
I don't
that.
think that's what's going to happen.
Yeah. I think
Next chart.
I think we've had enough.
Yeah. So you had a 42% rally in the average stock on the NASDAQ off the lows. That's what this shows.
That's pretty good.
And and notice how all
So
of
say that
that
Say that
started.
one more time. The average stock in the NASDAQ rallied 42% from the lows. That's good.
It's a monster move. So it's just very classic of, the initial thrust off the lows. We've seen it a million times.
If that was a bear market rally, that will be the mother of all bear market rallies. That will really
right.
people.
If we roll over and start making
It'll
new
be ugly,
lows, that
ugly.
will be the greatest bear market
of
rally
all
in
time.
history.
Yeah, we've never had a 53.
Like the biggest head fake ever.
The biggest retracement that didn't continue higher ever.
Bear market rallies should not be 50% of the drawdown.
Remember Urian's
They never
chart?
have been.
Remember Urian's chart? We had never recaptured 50% of the decline and then rolled over to new lows.
So can I just philosophically though, isn't this the wrong time to be predicting things that never happen, won't happen? Everything is so unprecedented.
Well,
why wouldn't we have the mother of all
Well, let's
bear market
remember,
rallies?
every single day something in the market happens that has never happened before
Yeah.
or rarely happens. So
Yeah.
let's just remember that. But what we want to do as investors is we want to weigh all of the evidence. It's not the 10-month moving average. It's not this. It's not Timmer's, Urian Timmer's awesome, by the way.
It's all of it.
It's weighing all of the evidence and trying to put the probabilities in your favor.
Yeah.
It's not about being right or wrong. It's like, okay, if this, and this all point to that, and all we got on this side is that and this, like, which side do you want to
Well,
take?
that's the art form of this, is knowing how to weight each piece of evidence.
Right.
I eat pieces of evidence for breakfast.
Next chart.
All right.
So, okay, we've got the setup. We've got some of the most.
Describe to the audience what we're looking at.
Hold on one second. Let me paint the picture. We're coming off some of the worst sentiment in history.
True.
Ever.
Individual and retail and professional.
Some of the worst sentiment in history, right? We talked about the drawdown since February of 21. If you recall, everyone had a SPAC. Remember, Michael? Right? So, great. Are we stretched? Do I think the risk is to the upside in stock? Yes. What is the catalyst? All of these things are great to put things into context, to identify what type of market environment we're in. But then you have to figure out, okay, what's the catalyst? What's going to unwind this whole trade? And I think this is it.
The dollar rolling over.
The dollar peaking.
I think it's not a want, it's a need.
For risk assets to go higher.
Stocks and
I
crypto in
don't
particular.
understand how the dollar. I can understand how the dollar stops rallying or even pulls back. I really don't understand how it unwinds.
Well-
It's the dollar versus the euro. That's the index.
Right. Well, it's
And-
more than that, which we'll look at in a minute.
How big is the euro of the dollar index?
60%.
It's big.
Directionally, though,
Well, but you could just
you got to come up with a reason the euro is going to $1.20.
But hold on, but there's a million ways to look at the dollar with the euro not in it. So
Fair.
Yeah. So it's not just the euro. The euro is a big percentage of the dollar index, right? To your point, but you could just X euro and you're gonna get the same picture, by the way. For the most part. But let's take and by the way, the British pounds are even worse than euro. So that's another story. But it's really the negative correlation between the United States dollar and stocks and crypto in general. And let's just go back in time for a hot second. What happened after the Trump election, right? The dollar peaked and started to fall. And what happened in 2017? One of the greatest years in the history of the stock market, crypto summer. Remember the holidays in 2017? Your drunk uncle asking you about Bitcoin and all that stuff. My high school buddies were texting me, JC, which cryptos should I be buying? Not if they should be buying cryptos.
Yeah, which one?
Specifically which ones.
Yeah,
I'll never
yeah.
forget it.
By the way, dollar's making new highs today.
Right. So that's part of the
No
issue
good.
that we're describing.
Not great.
Not great.
So hold on. So the dollar gets slammed throughout 2017. Stocks and crypto do great. Early 2018, dollar bottoms. And what happens to stocks and crypto around the world? They stop going up, not just in the United States, but globally. And then a funny thing happened after COVID. The dollar peaked and stopped going up and started to collapse. And what happened when the dollar collapsed after March of 2020? It was the greatest 52-week period in the history of the stock market ever. Like greatest period ever for the stock market. NFT summer,
Everything.
DeFi, all
Are
this.
you suggesting this is causal or just something that has happened,
The fact of the matter is,
has coincided?
in the spring of last year, right, just as the 52-week highs list was peaking, the dollar stopped going down and the dollar bottom.
These are facts.
And the dollar has ripped ever since. Facts, not opinions. And how have stocks done since February of 2021? They have not done very well at all. So for me, you can be in three different buckets. You could say, this is bullshit. This is just coincidence. Okay, fine. You could say,
I'm not. I'm
no,
asking
hold on. Not you, but
The royal you.
Youths can say, the royal you can say, it's just coincidence, this bullshit. Fine. You could say, okay, it's been a negative correlation, but now that's going to change. Okay, great. Or you could be in my camp and bet that the correlation is going to remain in place.
Well, you can see, though, that it's possible for the correlation to just go away.
Correct.
And
now,
they won't tell you when it's going to happen.
is that the bet that you want to make, though, is my point?
No, I'll tell you the bet I want to make. The shit show in Europe is going to be way worse than the great financial crisis for Europe. And it's tough to imagine a scenario where the dollar falls apart during what I think is coming.
Okay. So let's take Europe out of the equation. then.
You don't
Let's
think
go to the
that's
next chart.
consensus? You don't think markets are pricing any
It
of
could
that
be
in?
consensus and still be true. Yeah. No, it's very much priced in. It's very much priced in. Look, listen, that's where it's being priced in that dollar-euro pair. Right. So 100%. I'm not like a visionary to tell you that energy prices in Germany are up 16-fold. You can't survive that. An economy cannot survive that. So unless there's a solution, and there isn't, I just don't understand how you could have a scenario where the dollar gets completely wiped out versus the euro. So that's that pair. So it's consensus, but directionally, it really is not showing any indication of stopping. So that would be a big concern then.
Hey, I like this one. I didn't even know that emerging market. Good point, Josh. Sorry to step on that.
So that may or may not be true. The fact of the shit show in Europe is being priced into the currencies. That might be true, it might not be. But when you take the euro completely out of the equation and you look at emerging market currencies, they peaked at the exact same time that the euro peaked. And I don't know if they're having the same electricity 16-time fold. Okay,
they are.
Great. So the bottom line is every single time that emerging market currencies have gone down here, they've rallied.
This is a great chart.
And
I didn't know
every single
CEW
time
was
that-
a thing.
When emerging markets currencies are rallying,
What's in this basket? CEW.
Brazil, India, Russia, right? The big ones.
So there's a push-pull in there that doesn't conform well to the story about Europe and electricity shortages. The push-pull is half the countries.
What the fuck? The Cavs got Donovan Mitchell?
Really?
No way.
Stop.
I swear, Woj just tweeted this.
Wow.
Holy shit.
That's a bummer. I wanted him.
Wait, what did they have to do for that?
You know what? I don't even care. I didn't want to trade.
Dude, they
six
gave
picks
all their
this
picks
What
guy.
do
for
they
a
have?
decade.
Sexton.
Yeah, but him
you're
and
saying they
Mobley,
just
that's
gave-
good. Him and Mobley's nice.
They just gave picks up?
Probably,
They gave up a lot, probably.
yeah, Sexton and
4 or 5 number
7.
ones, something
Wow.
crazy. Probably more than whatever KD got.
All right.
We won't know if that's good or bad for like probably 2 years.
Are Knicks fans still Cavs fans, or is that over?
What are you talking about?
Remember back in the day, Knicks fans were Cavs fans because
No,
LeBron was there?
you-
Stop.
they
Come
could not
on.
be further from the truth.
Disrespect is
It
so
could not
bad.
be further from the
That's what-
truth.
This guy.
We hated LeBron.
The
Do
New
we have
York
to do
City
this again?
Cavaliers or something?
No, just stop. Back to charts. I can't even believe this.
I'm friends with a lot of Knicks fans.
Nobody says that.
Wait, what did he? I wasn't even listening. What did you just say?
The New York City Cavaliers of Cleveland or something like that they used
The
to call
Knicks
them.
were rooting for the Knicks were rooting for LeBron or for.
Pre him going to Miami.
All right, get out of here. It's enough.
This is back in the day. Come
No,
on.
we wanted LeBron, obviously. Obviously.
Oh, I know. Me and Josh were together that day.
JC and I went out that night for the decision, and it's a blackout to me.
We were
'cause-
pre-gaming for the decision.
and because after the decision was announced, I don't remember anything. All of a sudden,
I dropped on my knees and I was so happy. I was literally like
Man.
praying, like doing yoga. I'm telling you, it was amazing.
all right.
Anyway,
So I guess the point is, it's not as clean a story for me. I know you don't care about the story; you care about the price. But like,
No, he's saying all the story is in the price. Am I right?
yeah.
I mean,
Could
you
be.
can't argue with the
Am
price.
I wrong?
Right? I'm not going
Well,
to
you
argue
have
with
energy inside of emerging markets. You have both energy producers and energy consumers, the different economies that make up that basket.
Oh, we'll get there.
So it's not as clean of a story.
3 unprotected first-round picks and 2 pick swaps.
That's it? No players?
That can't be it. As
can't
part of
be
the deal. As part of the deal.
Yeah, there's some.
3 unprotected first-round picks.
Not bad.
Yeah, figured something like that.
All right.
All right.
That's fine. I've already made my peace with it. We'll keep our picks.
All right.
Next year will be a good draft. The year after will be a good draft.
All right.
Yeah, but we're like in no man's land.
We'll miss the play. We'll miss the playoffs.
We
but,
won't have a good draft pick. We're like middle of the
know,
pack.
dude, I know.
We're like the 10th best team, 11th best team.
It's
we
like the
suck.
worst. It's like literally the worst.
We
We're
suck.
not even good at sucking.
We're not even. Yeah, we're gonna make the play-in tournament. We suck.
We're gonna be on the bubble.
We suck again. You know, Major League 2. We suck again.
I know it well.
All right, what do we got next?
I'm a Heat fan, so I don't know what you guys are talking about.
All right.
So this is really a really interesting one. I actually texted it to you guys the other day.
We
Josh was
used
like,
it.
I like. Oh, did
we
you?
used it.
Yeah,
we like
yeah.
this.
This is great.
So I mean, I've studied these markets a million times. Like I said, I could probably draw them for you. You had the greatest 52-week period in the history of the stock market off of the 2020
So that's
lows.
March 2020 through February 21.
Yeah,
Okay.
biggest ripper ever.
And
You
now
know,
year 2 is
on this show.
Yeah.
Here we talked about like year 2s were messy. Remember we talked about all that?
that's exactly what happened.
Well, talk about a hot mess that we've been in for quite some time.
so is this this is like a composite? You're getting this from like a composite of
This is the current market.
this is the current, but I'm saying like that's a pattern that
We'll look at it now. Yeah,
Okay.
100%. So that's this year. So the question is, year 3, as we're going to look at now, historically does well after that year 2 digestion. I think Michael, when we actually were talking about year 2, Michael was like, that makes sense to me. You have a big move and then it consolidates. Like that
Tons
makes
of-
logical sense.
Tons of sense.
Right? So if you want to go to
when
the next
does year
chart,
3 like when does the meter start for year 3?
Right, it's a good question. Like it's not like an exact date. It's not
course
exactly
not.
52 weeks. It's kind of like a range. Watch as you'll see now. Go to the next chart, and this shows a bunch. So you can go back to the early 20s, right before all the Roaring 20s started. Go back to the early 30s. Go back to 1982 when JC was born. Same exact thing. Strength off the first initial thrust. Consolidation in year 2, and then in year 3 we really get going. Saw the same thing after the tech bubble. Saw the same thing in 09. Saw the same thing, and we're seeing
In some of those
very similar.
in some of those years though, the consolidation gets uglier than in others.
Sure. Yeah.
Right.
This one looks maybe like the early 80s, right? Maybe it looks like the early 20s. The one in 03 through 05 like looked stronger. The one in 2009 maybe looks stronger. But they all kind of have their own sort of symmetry, don't they?
You've probably looked at this, but I'm just curious. What does the leadership change look like between year 1 and year 3?
I think that you're going to get, you need rotation by definition. So I think off of the lows, you're going to get the bounce from the biggest losers, right?
Which
and
we
then
saw.
and then the rotation comes in where the ones that were previously showing relative strength, they kick back into gear, right? They were doing fine, they just weren't outperforming like the ones off the lows.
This is
and
a
they
sick
kick into
chart.
high
This
gear.
is great. This is great stuff.
This is a really right. This is like a really great tool, teaching tool for people that haven't experienced these markets but just for them to like feel better about what's going on now.
We're looking at 6 different charts of the Dow showing year 1 of the bull market, year 2, then boom, 3 the breakout. I like it.
Yeah, I like this a lot.
So it's not going to work this time, but I like it.
Yeah, 0 chance it happens this time, right? But that's not really the point, right?
I
This
know.
is one of those charts that helps put everything into context, right? And you can put the next one, and then we'll dive into, we talked about the catalyst. Without the dollar falling, like I said, I don't think it's possible.
So this is the S&P 500 4-year election cycle. Terranova was on the show 2 weeks ago. He's really into this also.
Yep.
So he had the stats. You have the charts.
Yep. So this will, generally speaking, we'll include the every year since 1950. We'll include all of the 4-year cycles. So last year, it was all of the post-election years. This year, it's all the midterm years. Next year will be the pre-election years. And when you look at the 4-year cycle, and this also includes the decennial cycle. So when you include the 4-year cycle, the time to be buying is in the summer of the midterm years.
Which is now.
Which is this summer.
By the way, the midterm, it does make a lot of sense just intuitively that the midterm cycle stinks.
But also that there's this liftoff with the finality of the election, or we used to have final results with elections. God knows what the hell goes on this time. Right. But it makes sense that since 1950, the 3rd year in the election cycle is the best because the guy in the White House has another couple of years of runway, but odds are whatever happened in the midterms went against him. So you have a little bit of that gridlock and as a result, less policy uncertainty. And like, I'm sure there's other things that go into it in every cycle that we could pick out, but just in broad strokes, even if you don't like who won the election, you probably do like the fact that it's over and done with.
Yeah.
And you're not thinking about it every day.
I could see that.
Like that, like this is one of those composites where this is, 70 years of history? Mm-hmm. And then it also aligns really well with just what we know about human nature.
Yeah.
Even if you hate the outcome, you like the certainty better than the uncertainty. So
I mean, just even, the 4-year cycle, most certainly, but even throughout the year, I mean, what do we do throughout the year? In different times of the year, we dress differently, we go to different places, we hang out with different people throughout different times of the year.
Right.
If you think that those changes in your life, those major changes in your life throughout the year don't impact your decision-making in the stock market, I think it's foolish.
That's a really good point. The thing is, though, that not everybody's experiencing the same thing at the same time.
Well, right. So it's an average. It's a mean, right? It's sort of like a general theme. So you're right.
Didn't somebody do a thing about the rain and up days in the market or down days? Do you remember that?
I remember like butter in Bangladesh.
No, that's obviously the nonsense thing. But somebody did something like that. I gotta find that. But yes, that's the kind of thing that does make intuitive sense to me. Where are we going next?
All right. So now, okay, fine, great. So we set the stage. So seasonally, it's a great time to be buying stocks. Washout levels from a breadth and just a decline standpoint, just all washout levels. So great. Now, just because all of those things have happened doesn't mean the market's going to go up. So we want to be like, okay, like you guys were asking me, if the data suggests that theory is wrong, you're going to change your mind. Well, yeah, obviously. So the question is, what kind of data needs to show up, or what are the things that we would need to see that would suggest that bullish thesis is incorrect?
What would give you confidence?
Yeah, that's just wrong.
Yeah.
And I think this is a great chart. This might be the best chart of the whole deck, in my opinion. You're looking at the financials retesting the peak from the great financial crisis highs. So in other words, last time we were here, Bear Stearns still existed. Lehman Brothers still existed. Merrill Lynch. This was the high in financials before the great financial crisis.
And we're back there.
Arguably, one of the most important prices of all time was the pre-great financial crisis high in financials. Am I wrong?
Can I pause you? Well, I know what Mike's going to say. 13 years, bullshit. The market doesn't have that much memory. What I would say that's maybe a little bit of nuance is it's all different stocks. Like the financials in 2007 is not the same stocks as the financials now is like BlackRock. It's not Citibank.
It's Berkshire Hathaway.
Yeah.
But I guess I agree that those prices are important, but I would also say like, but why?
At the index level, I think the prices are more important for the stocks than for the index because the index has gone, in financials specifically, there are companies that were important in the XLF that died.
Citi.
Yeah, I mean, well, Citi did like so much dilution that it's tiny.
It's like a living dead.
Yeah.
Walking Dead.
Yeah.
No, but you had companies in the XLF like Wachovia and Washington Mutual and AIG, and they're either a shell of their former self or they're gone.
The guy with the tan.
That's right.
What's the name?
Angelo Mazzillo.
Countrywide.
Countrywide. But the companies that are big index weights in the financials now are not all the same. In fact, most of them are not the same.
Yeah.
So that, to me, that would be like, well, what the hell does one thing have to do with another?
Right.
Talk me out of it.
Yeah, well, I'm not really necessarily interested in any of those things. I'm interested in the fact that every time financials got to these levels, they sold off, regardless of what was inside the index.
Okay.
So it's more from the components, obviously, these are facts. You can't argue that the components haven't changed, right? But every time we got up there, prices sold off, right? So that is demand absorbing overhead supply. Like, it wasn't a coincidence, despite the fact that they're much different components. When we got to those 2007 highs back in 2018, financials stopped going up.
Yeah.
And then we got right back there right before COVID, and financials stopped going up.
We were about to break through there, too.
We did for a hot second, and European banks did too. And then we failed quickly, and then the rest fell apart. And then we broke out last year. And now we're back to the scene of the crime. And you can make the same exact comparison to—
What is that level for the XL?
31.
30-31. So, okay. So I'd buy that just because of, like, look how much activity takes place around that level just in the last few years. I don't even need the 07. So, I see it even recently.
Yeah.
But you're saying, like, that this level takes on an even added layer of importance because
question.
of historically. Okay.
No question.
I'd buy that. Why are you showing it to me with the home construction index fund right below it, the ITB?
Because it looks exactly the same.
Yep.
Number one. Number two, isn't it hilarious that the home construction index fund peaked the month it launched in 2006?
Yes. Very well timed.
Hilarious. So anyway, so we got back there in 2018, just like financials did.
Oh, that's inception for the ITB?
Yeah.
Mike, you see this?
Yeah, it launched right before the peak.
Yep. And by the way, the other one did too. XHB launched within like 2 weeks of this one. It also obviously peaked at the same time. So anyway, pre-COVID highs, same exact level. We broke out of there last year, and here we are retesting the peak in the indexes of home construction before housing completely fell apart. Equally as important, I would argue, as financials in that cycle, right?
Okay. So do these two things typically do the same thing?
I mean, they're
Home
not—
builders and banks are not.
You know, they're
both sensitive.
They're consumer discretionaries, financials. They're going to move with the market. They're not going to move with staples. They're not going to move with Utes.
Okay.
You know,
Okay.
energy.
I'd buy that.
Yeah.
I think they're both rate sensitive.
Yeah.
I think they're both economically cyclical.
Sure.
Okay. I'd buy that.
Yep, and they look exactly the same.
So gun to your head right now, as long as both of these are above support and holding, then you have to be optimistic that they'll rally.
The world is not coming to an end if these two indexes are above their prior cycles highs from back in 07.
Okay. I would buy that.
The world is only going to be ending if these are below.
And then like it's over.
Then anything can happen. I have no idea. But if we're above that, the world's not ending.
Okay. Cut to like people in the streets eating each other's faces.
Yeah.
Okay.
Zombies and stuff. Yeah,
All
yeah.
right. I feel better already.
All right.
Next.
Next chart.
What a shit show.
What a shit show, dude.
Honestly, blow your brains out.
Wow.
Wow.
I mean,
Wow.
if you're a fucking gold bug after this year, I don't even know.
We're looking at gold and silver miners relative to the S&P
Holy
500, both
shit.
new all-time lows. Wow. All time? Like all time?
Well, the ETFs, the
wait,
GDX is like 15 years old or 16, and silver is like 12.
Who owns
Do the gold miners look worse than gold or better?
Newmont Mining is like the blue chip gold stock.
that made a 52-week high
Yeah.
The
recently.
market got cut in half in like 3 months.
hang on,
Cut in
time
half
out.
in 3 months. Now.
How this
cut in
is
half.
very impressive. I was just thinking, like, who the hell is allocating to silver miners? Like, who's the audience for SIL?
It's a beta
It
trade
has
on
$750 million in assets. That's impressive.
Because it's part of some people's like asset allocation. It's how
Silver
they get their-
miners?
It's how they get their silver miners.
Silver miners.
Silver miners.
SIL, not GDX.
Yeah.
You got to be some kind of a Canadian to be buying that thing.
So-
I
Yeah.
can't. Right?
GDX, I mean,
They
that's
do,
like
the Canadians do, obviously, you're going to, like in California,
GDX
they're going to buy more tech stocks.
Bro,
New
so-
Yorkers buy more bank stocks.
Right.
GDX is a
And
staple.
more energy stocks are
Bro,
bought by the Texans.
so silver miners are like the tech stocks of Canada. They fucking love this shit. Believe me, I've been to the live events. All right,
wait, hold on, hang on. I gotta say something. Newmont Mining made an all-time high in
For a second.
April
Yeah. And then got cut in half.
of this year.
And they got cut in half in 3 months.
Can you imagine?
Look at this piece of junk.
I'm familiar.
Can you imagine?
Josh,
like,
look at this.
Can you imagine your whole way of life is like built around this idea that like fiat dollars are the problem and only gold and silver will save us from
Fiat
inflation?
dollars are the only things going up.
Dude, the dollar can't stop going up. Inflation can't stop going up. And anything gold or silver is going to zero. It's really impressive how wrong you could be.
No, it's interesting. These aren't even like really directionally. Newmont and gold and GLD look nothing alike.
I wouldn't say they look nothing alike.
Newmont's great. Newmont's great. You got a commodity that's falling, plus all the costs of running a public company, and labor disputes in foreign lands.
What can go wrong?
What's not to love?
By the way, so with that being said, I know we've just completely abused the entire gold bug community.
No, it's great.
No, fine. Yeah, I don't give a shit.
It's working.
Yeah. My point is, if the dollar hypothetically were to begin to fall, couldn't it be a kumbaya moment between the gold bugs, the stock market permabulls, and the crypto crazies? Like everybody wins?
How does everyone win? The dollar falls.
The dollar falls.
How is that good for gold?
It's not bad for gold.
It's not bad for gold.
It's not bad for gold. Stocks, I think, will go up very much so if the dollar falls.
So then gold is not an inflation hedge.
But here's what let's finish the thought, right? So let's just say that does happen. Dollar falls apart. Like I said, it's not bad for gold. But if you know that the dollar's going to fall apart, and you could pick any way to express that thesis in the market, is buying gold the way you're going to do it?
No.
Right.
S&P.
Right.
Like
Qs,
you've shown us very clearly.
That's how I look at it.
CEW.
So we could be in a scenario where like us abusing the gold miners right now, like that is the bottom. That might just be the case. But I think in that environment, stocks are outperforming.
Is there any, like, if you were to pull
By
back
the way,
this
we're
chart,
not abusing the gold miners.
No.
The market is.
They're masochists. They're masochists.
Reality is. It's not us.
They're nihilists.
It's at new all-time lows. My point is, dude.
It's 3.
Man.
I think we're at like 6.
Let's get this off the screen before it infects everything. Okay, this is fascinating to me. So the central banks in Europe have been awoken, and if you look at German yields in like the last 2 weeks, it's like extraordinary what's going on. And I never thought they would do it, but they like have no choice but to do it.
I remember joking a couple of years ago or last year that German yields had resistance at 0.
Yeah.
Remember that? How funny that was?
Yeah. Well, not anymore.
Not anymore.
All right.
Now
So
there's support at 1.
Walk us through what's going on here. These are 10-year yields for Germany, United Kingdom, Canada, and Australia, and everything's headed higher.
Well, I mean, these are pretty important countries, I'd argue. And, I get asked a lot about, JC, where do you think the U.S. 10-year yield is going to go as we push up against the 2018 highs, because the U.S. 10-year yield is below that. And I say, okay, well, let's look around the world, see what's happening out there. And they're all above the 2018 highs.
Oh, yeah. Yeah, meaningfully.
Yeah.
And they're not playing games.
So if global markets are any kind of indicators to what's going to happen here in the States, it's hard for me to bet against rising rates. And then what does that mean? JC, I don't trade bonds. I'm never going to trade a German Bund. Great, fine, don't. That's information, because if interest rates are rising, what types of stocks do well in an environment that interest rates are rising? Is it growth stocks? Is it tech stocks? No. Is it semiconductors? No. It's cyclicals, right?
And
it's the value-oriented area. So I think for stock market investors, these charts are very important.
The 2-year is at a 15-year high.
Next chart, John.
Boom. This is the chart of charts. Look at this Frankenstein chart on the 2-year. What is this? All of these really.
The 2-year yield
What
is
Frankenstein?
This is not normal.
You have inversions across the curve.
No, just forget.
What
I'm
are
not
you
even
talking
talking about
about?
the curve. Look at the 2-year. Look at that.
The 2-year yield is 3.42. The fucking 30-year is 3.22. That's like as inverted as inversion goes. That is remarkable. And there are a lot of purists waiting for the 10s in 3 months. And that's like the real thing. That's like
They already rolled. They were the last ones holding up, but they already rolled a while ago.
right. So that's like the Cam Harvey. That's like the real research. I think it's like 9 out of 9 times
The
when that
6 month.
inverts.
The
it's
6
a
month
wrap.
is 3.38. So the
Oh,
6
yeah.
month is well above the long-term yields as well.
The yield curve's inverted. We know that. It's not anything new.
It's been since April.
Yeah.
But now it's severe.
Yeah, great.
More highs for yields today.
Great. What does that mean? That we're going to go into a bear market? Great. We've been in one.
But stocks are going out of the highs. Going out of the highs.
I don't think it's a bear market signal. I think it's an economic signal. It's more, and it's not even a signal. So a lot of people would argue it's actually causative. Just like just thinking rationally, if you're a bank.
No, you're right. What you just said. Causally. Yeah.
It's more than a signal. Why would you lend money out on a 5-year term if you're being paid more to not lend it out, or you're being paid more in 1 year on the interest. Like, of course, that would stop you in your tracks.
No, but they're not the U.S. government. They've got spreads.
Right. No, Josh is right. You make a good point, but for me, it's less about the why. I know, I always say why. I don't really know why. I don't really care. Maybe I'm not smart enough. For me, it's just very simple. The bottom line is when we've seen the yield curve inverted in the past, ultimately maybe we get a recession or not. But it's at that point, the market's already been under pressure for a while, right? We've already seen some of that. So
is that true?
Yeah.
Because didn't we have a yield curve inversion in 2019 at record highs for the S&P?
We had it in
19.
It was in August of 19, I think we got it.
Okay, but 2019, the stock market went up 30%.
Right, so it was a little bit leading in that case. Yeah, sure.
Now, you had COVID start a few months later, which I don't think anybody was expecting, including the yield curve. That might just be one of those curiosities of history.
Well, I remember being at a conference and being asked by a journalist, like on video, like, what do you think about the yield curve inverting? And I was like, well, we didn't just wake up this morning and the yield curve was inverting. You could see it, like, flattening
it took
for
all year.
Like, it just happened that it inverted this morning, but like, it's, you could see it. It's like
it's been in the works.
Yeah.
That's true. But the stock market was not under pressure during that inversion.
No, it was not.
Stock market was on fire.
Because the dollar was weakening.
But the 10s minus the 2s haven't been this inverted since 2000.
Yeah, I mean, look, the longer of a period of time they stay inverted, the more obvious it is that it's like
Look how deep it is.
Yeah.
It's deep.
It's deep.
It's like an untenable, like it can't continue that. Forget about the depth of it. It can't continue that way.
Unsustainable.
So what do you take away from this?
I think that when you look at the rest of the world, you look at Canada, Aussie, right? They're all above their 2018 highs. So, like, if you're asking me what I think about the bond market, where I think rates are going to go,
I think we'll follow.
I'd be hard pressed to say not higher.
What's the 2018 year high for the 10-year? Is it 3.5?
3 and change. Yeah, 3,
all right,
10.
So for all intents and purposes, we're there.
So you think, but you think
320 maybe something.
You think rates peak?
325, I think it was actually.
Rates peak, dollar rolls over, risk assets rally.
It's not so. The stock market just wants the bond market to not go crazy, right?
Which it is.
Which it has been, right? Of course, right? And that's a problem. So as long as the bond market's not crashing, I think it's fine for stocks. It's as long as there's not crazy volatility in the bond market. Because we're talking about a $120 trillion market. If it's having a heart attack, it's going to infiltrate other asset classes.
And more importantly, I know you don't care about this, but it affects like people's real lives, mortgage rates, everything.
Well, this is the main point to me. The charts of the bonds are the symptoms. The cause is there's no such thing as sustainable high inflation. Like you could have like stable low inflation, which is I would argue is the environment that we were in for 10 years. Yeah. So you have low inflation and it's stable. And in that environment, like there's business continuity, you could plan projects, you can make investments, you can hire people, you can price goods for sale, you can like conduct business.
There's nothing more important for confidence than stable prices.
Inflation above 5% is not stable. It might be stable, like in other words, if inflation falls from 8% to 5% and then stays at 5%,
it won't.
That's not a win.
That's chaos.
It's chaos. Anywhere above 5%, and the longer it's above there, the more unstable it is. And you could make the same argument for deflation. There's no such thing as stable deflation. You can't have negative prices year after year. So we had a very stable situation. Now we have literal chaos in the real economy. Thank God jobs are plentiful, and that's the one thing everyone's hanging their hat on. They may not be if revenue continues to take a hit. And the reason it's taking a hit is all the uncertainty being caused by high inflation. So, like for me, what we're looking at here with yields is not driving anything other than maybe the stock market and sentiment. This is being driven by the actual chaos in the economy. What do you think about that?
I mean, I don't know anything about any of that stuff. Like for me, inflation and deflation and employment, all of those are implications of price movements that happen prior to any of those things, right? So I'll just focus on the first one, right? On actual price that we can act on. And then all of those things will happen, right? Like you said, and you're right. But I'm focused on price. And in this particular instance, as a stock market investor, right? I'm not trading these credit spreads. I'm not trading the yield curve, right? I'm not an institution. So, he talks about how this affects people's lives, 30-year mortgages. All that's great and everything. But again, those are the implications. I'm not really interested in that. I'm interested in what the institutions that are driving these prices are actually doing. And if the bond market is crashing and rates are ripping, and literally the bond market is crashing, that's going to impact the stock market because they have positions over there that need to unwind because they're getting smoked in the bond market. By the way, same thing when the bond market's limit up. If the bond market's limit up and rates are crashing, that's also impacting the stock market. So it's more like a lack of volatility is what's going to be good for the stock market. Rates can go up. They just need to go up slowly.
Yeah.
Right.
What's going on right now around the world is insane.
The market is now closed, boys, and the Qs went positive on the day. We'll take it. Qs are positive. S&P up 30 basis points after being down 1% earlier. Hey, you got to start somewhere.
September 1st, right?
High or low. High or low.
Let's
high
go.
or low.
Starting off the new month strong.
High or low. Let's go.
We're only down 2,000 Dow points in 2 weeks. All right, what do we got next?
These are the
Pieces of shit.
These are the gold miners for boomers, right?
So
Oh my
terrible.
God, that's so great.
Yeah.
Verizon, AT&T.
Yeah.
Well, they used to be prized for their dividends, and then they started doing web content, I guess. I don't know what's going on.
I wonder what happened to their shareholder base. They've got to be blown out, right?
T-Mobile is kicking their asses.
Hold on, slow down. We're getting there. We're getting there. Hold on.
I haven't seen your charts yet.
All right. You know what's coming. Like you've done this a couple times already. I like it. We hung on too long. Go ahead. Hold on. Verizon and AT&T. Just look at those charts.
No man's land. Mess.
Horrible.
They both pay.
Wait, this is 25 years
Yeah,
of
bro.
flat stock prices.
Granted, they pay 6% dividends.
Yeah.
So this is price only.
Yeah.
Okay.
They pay 6% dividends each.
Well, they better. They better.
Hold on. Go to the next one because T-Mobile doesn't pay any dividends.
Bang.
Bang.
T-Mobile's up 800% in 7 years. Am I reading this
Since
right?
they merged with Metro PCS.
Sprint. Yeah.
Sprint came later.
Oh, okay, got it. Right. So they have been very aggressive on pricing and not worrying about paying a dividend.
I'm not going to get all fundamental, obviously, but my understanding is they got all the prepaid plans. So I guess like all the drug dealers and stuff.
Yes.
Yeah.
That's a good market to have. This is remarkable.
Isn't it? This is total return, by the way.
So AT&T is up, this is back to 14. AT&T is up 6%. T-Mobile is up 773%. That's incredible.
May of 2013.
The guy, John Legier, who orchestrated this, the guy who's always wearing pink, the CEO.
Okay.
No, he's the man, though.
I'm sure, yeah.
He's the man. I once saw him.
How do you know he's always wearing pink?
That's his shtick. He wears the magenta, the brand color of every public appearance.
Oh, wow, that's hilarious.
And honestly, this is a true story. I was at the Polo Bar on 57th Street, the Ralph Lauren place.
I went once with you. I don't remember.
Yeah. And I think he was eating dinner with John Paulson, and he was wearing the f***ing pink. Like head to toe. He was wearing the magenta. And I don't know, that could be 6 years
Next
ago.
chart.
5 years ago. What is this? Oh, this is, all right.
T-Mobile.
Still bullish?
It's going from the lower left to the upper right. What's there not to like?
Yeah, that's incredible.
You know? It looks like the opposite of gold miners, right?
Next.
Hold on.
Nah, it's a team. Who cares? What?
What do you mean, who cares? Tell me how many stocks you can name off the top of your head at all-time highs right now.
Fine.
Go.
Fair point.
Dude, Mike's attention span is like
No,
is like
I'm
a child.
speaking on behalf of the audience. Nobody
right.
gives a
But
shit.
how about audience? New all-time highs. Hold
Fine.
on. But just because it's there doesn't mean we're going to buy it. About $1.50.
I'm the audience. I get it. All right, T-Mobile.
You don't get it. What's the risk? You're not even paying attention.
I'm not. I can't even.
150 United States dollars. If we're not above that, leave it alone. Above that, we own it. Target of 225. That's a 50% trade right there. That's not nothing.
That's all based on Fibonacci extensions?
The pricing, the relative strength has nothing to do with Fibonacci.
This is not going up 50%. If it is, I'll buy you something. Next.
It just went up 50% like in 2 months. It just went up 50%.
Next. All right. What are we looking at? Indian stocks?
This is the Nifty 50 making new all-time highs relative to the Dow Jones Industrial Average.
Why is this happening?
Because they're buying stocks in India more aggressively than they're buying them in the United States.
No, it's like, that's it. Facts.
No?
Only.
You going to argue with that?
Nope. Next.
Hold on. But let's talk about this, because not only is India making new all-time highs relative to America, but just think about how shitty emerging markets have been.
Yeah.
Like, so when you put it in the emerging market, like,
Double
wow.
whammy.
Did you see what happened this week with the third richest man on earth? Did you see this? It's an Indian.
Yeah, but
Who
these-
is the third richest man on earth these days?
But
Okay.
Jason,
Changes
these
like
stocks,
every day.
I'm going to tell you who it
these
is.
stocks still suck because
not me.
they're priced in
No,
dollars.
can we hold on?
EPI and INDA still suck.
His name is Gautam Adani. He's a college dropout from India who just became the third richest person in the whole world. His net worth is $137 billion.
I hope his money's in dollars.
No, that is him. He has one of the biggest publicly traded companies in the Indian stock market, and this thing has just gone.
That's the Reliance guy.
This thing just went vertical. He just passed. He's behind Bezos is 153 billion. Musk is 251 billion. He's right behind Musk. He's ahead of Gates. He's ahead of Buffett because they've given away a lot, and he just passed the guy from LVMH.
Dude, you should see this guy's crib. It's like 30
Oh,
stories.
so you know who I'm talking about.
Yeah. It's like 35 stories high, and like it's like a high rise. It's just his house. It's got like helicopter pads. Like I think they made him stop. They didn't let him use the pads anymore. Something happened. I don't know, but it is sick.
He's
And
the
it's in a
Buffett
cool
of
area,
India.
too.
He has a massive portfolio of companies in various industries, including ports, coal, and energy. He added $60 billion to his fortune year to date.
What's his morning routine?
So I'm saying, but that's a big part of what we're looking at here. How many books does he read?
How many books does he read before breakfast?
He only became a billionaire in 2008.
I feel like we're getting to the bottom of the barrel. You have no more charts.
Hold on. So I'm just setting the stage, my friend.
Are we going to
So
emerging
it's like,
markets?
okay, guys, I live in America. I don't live in India. So what does this have to do with me? Well,
Oh, that's a great Batnick. Killing it.
here's a Nifty 50 making new all-time highs on a monthly closing basis. How many indexes can you name that are doing that? The answer is 0 because there aren't
Dude,
any.
nobody gives a shit. We can't invest in the Nifty 50. We're U.S. investors.
John, next chart.
do I have a currency hedge? for
Make
this?
my trip. This is an ADR, $3.5 billion consumer discretionary.
That's
pushing
interesting.
up against new highs. You know, you got a Kardashian bottom. Like the whole thing is setting up right there.
This is a travel stock in India.
consumer discretionary. pushing up.
MMYT.
You had my curiosity.
Make my trip. MMYT. It hasn't broken out
Batnick
yet.
just got long. He's in. All you had to do was show him a trade.
Oh, this is so sloppy.
If this thing breaks out, you buy it.
can't
Let
buy
it.
it. You can't
Keep
buy
it on
this.
keep it on the. You know, you want to buy relative strength in this
Dude.
market. You want to be looking at stocks that don't look
Is
like
this
the
true
other
what you
ones.
said?
This is so sloppy.
Wait, this is the only major stock market at an all-time high right now?
If you price Japan in yen, it's also making new highs.
Okay. Which I often do.
Yeah, the DXJ. If you own the DXJ, you're doing great because it's priced in yen, right?
All right, next chart. Oh,
All right.
wow. This is where I'm interested.
So people are telling me that energy's overbought, energy's overextended. We've seen the rally and all this stuff. I would argue it hasn't even started.
Just
Okay, I would argue that makes no sense. How about that?
well, he's taking it
Shocking.
back. He's taking it back to 07 or
Yeah.
2001.
Where were we in summer of 2008? Where were you in the summer of 2008?
Not in a good place, my friend.
You think if this breaks out, this could have a whole, like, if it's just starting, this could have a whole bull run. Nobody would believe
For
that.
people that aren't watching JC, how do I describe what he's doing right now?
He's doing like a shrug, but it's like a combination shrug, kiss my ass. Yeah, I kind of like it.
As Americans, as investors, as humans, forget as investors, just as humans, to go to work every day, to wake up every day, thinking that oil at 250 is out of the question.
Oh,
and
no,
not on the
I
table.
agree.
I think it's a problem. I think energy is 4% of the S&P 500. It's 0% of the Nasdaq 100.
Yeah.
Investors are not in energy.
Yeah. I would actually take it a step further. Put oil aside. Natural gas would be a bigger driver if you look at the stocks that make up the energy indexes. Actually, a bull market in natural gas would be even more impactful, and nobody's invested in that. You know who's invested in that?
Buffett.
Like Oklahoma Thunder fans.
You know how happy it
Oh,
makes me that you're actually me about natural gas?
No, I'm with
Like,
you. I'm with you. We're on the same page.
Remember we would argue about the oil natural gas ratio?
Yeah. That's going to be the story this fall.
Okay.
Natural gas.
So energy as a sector hasn't broken out. Next chart. Now, when you break down into the industry groups, we're still nowhere near those former highs. And we're still below the 2016, 2017, 2018 highs. So the explorers and producers haven't broken out. And John, next chart.
Those have been dogs. This is the worst.
Oil services is below the lows from 02.
Schlumberger, Halliburton.
Schlumberger, exactly. Yep. So
Baker Hughes, just terrible.
They give you all the downside of oil and like a third of the upside.
Just terrible.
Yeah.
But we've seen some outperformance for similar reasons that we've seen the worst growth stocks bounce the most,
Ox
right?
is the best stock in the S&P this year.
Dude,
by a lot.
So Berkshire Hathaway has now bought half of this company.
No. They bought 29% of the company,
much?
but the SEC now allows them to buy up to 50%.
They got permission to go
up to 50. Yep. So Uncle Warren's been buying, JC's been buying, we're in. I'm actually in the warrants personally myself. Uncle Warren's in both the common and the warrants.
How much is the stock up this year?
A lot.
Is it the best stock in the S&P? It could be.
I mean, it's a 7-bagger off the lows.
Oh my God.
And the warrants, forget about it. The warrants don't expire till 27, I think. 28 maybe? Maybe 29, something like that. Not for a while.
So I own the IEO, which owns this, but I don't own any of these producer names individually.
Yeah.
But this is the one everyone's trading, and Devon Energy is the other one.
Uncle Carl was in there cleaning everything up, and then he sold his shares to Warren, which is nice because Warren's like, yo, if Carl's been in there cleaning shit up, how bad could it be? So then, they have different objectives. So Carl's like, my work here is done, right? Like, I can't, they're good. So then Warren steps in.
This is a huge bet, though, that Berkshire is making on one natural gas, on one oil and gas
next chart.
company. And Chevron.
Yeah. And JC's been buying Chevron, too. Clean out. If we're above 135, you stay long. I think it goes to 300.
Yeah.
I think you got a long way to go.
And this, you got buybacks, you got dividends.
They've been paying dividends for, check my math, I think 35 years. They pay 3.6% currently. Yeah. And they've been raising even when oil crashed, every year they kept raising their dividends. Just think about that.
It's an aristocrat. It's a dividend aristocrat.
It's a dividend aristocrat.
Yeah, we have
Because a lot of these oil and gas stocks stopped raising their dividends and then started again. Yeah. Right? They never stopped.
We have any tech stocks coming up?
Michael wants to lose some money this summer.
Yeah. Let's see. So that's Chevron. So here you go. You can argue this is tech.
This is hot.
So come on.
Solar. Look, I mean,
but you can't own this name. Look how volatile that is.
Ton of insider buying. I would say that you can own the name, and if you did, your money doubled in the last 2 months. So I think you can own it.
So volatile.
Yeah, all right.
Would you wait for the next retest of this $70, support now?
I think you got it.
Or would you just buy it?
I think you got it. I mean, listen, you had a great entry against 70, all that former resistance. People that tell you technical analysis is voodoo. Here's, example number 700.
You're probably right, JC. I can't buy this. It's too volatile.
Yeah, that's okay. Don't buy it. Yeah. You don't have to buy it. But I think just bigger picture, look at solar. You got a ton of insider buying coming here. If you're going to buy semis, I think you're better off in solar because they're basically semiconductors. So I would be looking to buy pullbacks in this. The relative strength is out of control. New 10-year high. How many stocks do you know making 10-year highs?
And the headline risk is all in your favor. Like, the worst headlines you're going to read this fall are going to be about electricity rationing in France, in Germany, industrial production halted because they literally can't fire the plants, or they're going to prioritize heating homes rather than making bullshit. And all of that directionally, like all that headline volatility is in your favor in the solar stocks. Like it's going to be like every day another great headline for those names.
And there's a bunch of names. I just used this one example, but look at TAN.
Enphase Energy.
TAN.
Yeah,
Enphase is obviously the best stock in the world, I think, depending on how you, but yeah, solar's making new highs on a relative basis. Like, in a market environment that stocks are under pressure, you want to look and see which stocks are not under pressure. That's why I showed you freaking India. That's why I showed you T-Mobile. That's why I showed you for solar. They don't look like the other ones.
And solar is not an oil proxy. It's specific to electricity and the need to build more electricity infrastructure.
I'm not Mr. Fundamental, but is oil going up and natural gas going up a bad thing for solar?
No.
Right.
No, but it's like a separate way of putting on the same trade.
Yeah.
Yeah, I agree.
What else we got?
Had to go there.
Dude, I don't believe this market cap was ever $3 trillion. Crypto.
All right, well,
I think there was a lot of leverage that we really hadn't considered.
As opposed to the leverage in the stock market?
Fine.
Or bond market?
Fine, but I think crypto is inherently built on leverage.
All right.
And there was probably not $3 trillion actual US dollars ever invested in any of this shit.
All right.
That's not controversial to you?
I don't think it's controversial. I would just say it's not anything new. How is it different than the stock market?
I don't know. It's extremely different than the stock market.
I don't think it is at all.
Okay. Say more. Say more. Why is it not different?
Well, first of all,
second of all,
I'm with Howard Lindzen on the fact that these are just more growth stocks, probably more specifically software stocks.
So they're securities?
I am not qualified, nor do I give a shit whether they are, whether they're not. Actually, I do, because I actually borrowed against the portfolio, and I'm not allowed to buy securities on my portfolio loan. So I bought a CryptoPunk instead, you know?
Okay. As long as you're staying risk off.
Hold on. Go back quickly.
That looks good.
You know, for me, I think it's important, just if you're a crypto bull, or maybe you're interested in investing in crypto or whatever, like if you have any at all interest in the subject, I think that it's vital for crypto in general to stay above the prior cycle's highs. Bitcoin above those late 2017 highs. Ethereum needs to quickly get above those 2017 highs.
We're looking at this in market cap terms, though.
As opposed to what?
I don't know. Price in dollars?
Price is market cap. T-Mobile's 177 billion in market cap.
So
Verizon's 172. It's the same thing.
So this is showing that. What exactly is it showing?
It shows that we are still above the prior cycle's highs, which Bitcoin is doing also.
Total crypto market cap.
Right. And then Bitcoin itself looks exactly like this too, by the way. Yeah. So, and it's also above the prior cycle's high. So Ethereum needs to do that quickly.
What percentage of total crypto market cap is Bitcoin? Is it 60%?
It's 40%.
That's it? Mm-hmm. Okay. I would have thought more. Would you have thought more?
Bitcoin is 40%, Ethereum's 20%, and the rest is 40%.
Okay. All right. That makes sense.
Yep. So it needs to stay above those levels.
Good. So this is hot.
You like this one?
Flippening.
Yeah.
This is Ethereum. Ethereum versus Bitcoin in like a ratio.
Ethereum
chart.
Looks way better. Ethereum is way stronger than Bitcoin.
This is about to break out.
Ethereum's way stronger than Bitcoin.
I'm not one of these people are very emotional about these. Ethereum maxis, Bitcoin. I mean, they're crazy. Like I'm not one of those. You guys know I don't give a shit. When I get asked, what do you think about the flippening? Well,
ETH looks better.
I'm not going to bet against the flippening. Like, you look at a chart like this. I've seen a million of these in the past.
But the flippening is a long way away.
We're halfway there.
This is price, not market cap.
We're halfway there.
It's a long way away.
Ethereum needs to double relative to Bitcoin.
Good. Remember? Wait. Do you remember? Bitcoin is gold. Ethereum is silver. Do you remember that?
Was that a thing?
No, that was
like
a thing
that an idiot tweeted.
I think it's more like if I had to pick one of those things, I think it's gold is. Bitcoin is gold. Ethereum is the internet.
Right.
I think makes more sense than
wait. Ethereum is gold, digital gold.
No, Bitcoin
is digital gold. Ethereum's the internet because you're building on it.
Yes.
You can't build on Bitcoin.
Okay.
Bitcoin is literally just a means of exchange.
Okay.
What else we got?
So I think the path of least resistance is higher. I don't have this trade on. I own Ethereum and I own things
hold on.
Priced in Ethereum.
Ethereum relative to Bitcoin, the path of least resistance is higher.
I think so. I wouldn't bet against that.
Okay.
Yeah, I wouldn't bet against that. I mean, I'm literally not betting against that. At least not right now. I see no reason to.
I'm a big ETH guy.
Are you?
Only because I don't know anything about technology. Only because I like the idea that something that has productive value is worth something that's just like a store of value.
But doesn't that in and of itself add value to the community to have that store of value?
Not if it's as volatile as it is. No, there's no value at all. If something can go from being worth 70,000 to 19,000 in 6 months, it's not a store of value. So it's failing. Bitcoin is failing as
No,
what
but you're
it's
thinking about
supposed to
a
do.
long-term store of value. I'm specifically talking about a store of value. It could be for 5 seconds. I can transfer.
That's what USDC
Hold
is
on.
for. No,
I think store of value
there is that.
hold on.
That exists.
Store of value
fine.
store of value is a dumb term in general.
Yeah.
But what if people say, no, I'm storing my money in Bitcoin?
I don't think it's a dumb.
That's
listen,
fucking dumb.
I think my house, I own my house. I think I'm not looking for monster appreciation. It's just a store of
Let me ask you
value.
a question. There's a house you love in Miami, right? Where do you like it? Star Island? What's the dream? What's the dream in Miami?
Coco Plum.
Okay. There's the house that you love, the buy of a century, but you need a 6-month bridge. You have to get out of your current house right now to sell it, and then you need 6 months just to hold that money somewhere.
Yeah.
Crypto's
Erroneous.
Crypto is not going to be the
Erroneous.
place
What does that have to do with
Erroneous.
anything? Terrible story.
Well, that is
terrible
store of
story.
value is a place that you could store value. How is that erroneous?
Let me tell you.
6 months?
Yeah.
Do words have no meaning?
Those words
you
have no
put 'em in
meaning.
Does
treasury.
store of value not have to actually mean store of value?
No, you put them in 3-month bonds, whatever. That's not what we're talking about. Well, and it's obvious that you think the way you think. A Jewish white male from Long Island is how you're thinking right now.
That's right.
So hold on.
By the way, it's not a store of value is dumb.
Hold
Bitcoin
on,
is not
hold
a store
on.
of value. No sense.
Store of value?
Stop. Pretend for 2 seconds.
70%.
Pretend for
What
2
value does it
seconds.
store?
Pretend for 2 seconds you are not a white Jewish male from Long Island, and you are perhaps an African from the Bronx making money in America and needs to send that money to your family in Nigeria.
USDC.
And you're doing that on a weekly basis.
Stable coin. Don't need Bitcoin.
Okay, fine.
Stable coin.
All right.
Upload. Listen, I'm with your example.
Just telling you what's happening.
All right,
I'm not telling you whether it's right or wrong.
I'm a rich businessman. Give me a good story. I'm a rich businessman from Venezuela. Okay? Irresistible to women. I have money in banks in Miami. So far, this is like a true story.
Yeah,
You know.
sounds-
Okay.
yeah.
Okay. Why the would I store money in Bitcoin, even if I couldn't have access to those banks? If somebody said you can no longer move money out of Venezuela into the United States into a bank in Miami, but I still have access to a crypto account, USDC.
Great.
Now I'm priced in dollars.
Yeah.
I have the stability. I don't have to wake up every day and be like, oh, I hope Pomp is bullish on Bitcoin this week, or else all the value I've accumulated throughout my life could be up in smoke. I don't have any of those concerns. So basically, the only store of value still is the dollar or the yen, and a digital version is pretty damn cool, especially if I'm locked out of a traditional banking system.
Yeah.
That's a store of value.
Store of value
Great.
is just, it's a dumb term.
Bitcoin is not a store of value.
Okay, but you're talking about your perspective, and I get that. And
No, I'm talking about math.
Hold on, I agree with everything you're saying.
I
by
think
the
I
way,
agree with everyone. It's not a store of value.
We're agreeing.
It's not a store of value.
Well,
Makes
this
no
has
sense.
nothing to do with you or me. What is actually happening is that Bitcoin is being used
Do the stable
more
coins,
than ever.
Do the stable coins get put into that calculation of crypto market cap, or are they considered something
No.
different? They're not in there.
No.
Okay. All right. Interesting. Okay. All right. We're back on track. Chart back on.
No, that's it. You
we
know?
did? Okay.
Yeah, no. So I wanted to talk about the flippening.
I got a few charts. I got a few charts of my own.
All right, let's see the charts.
I just have a few. Just have a few.
All right, let's see.
I just want to talk about some gap fills that we've been saying. And we're going to get rapid.
Wait, are
because-
you putting this Apple chart up?
Yeah.
All right. Go.
I just want to talk about some gap fills. We had really good earnings for a lot of these tech stocks. Amazon had a massive gap up after earnings that got filled. We'll just go through this quickly and then we'll talk about them. Next chart. Apple, same thing.
Triple top.
Filled the gap. And I think it closed green today. Chart next.
Wait, can we stay there?
Hold on, we're almost done.
All right.
Walmart, same deal. Lastly, Disney. So
That's a gross gap fill in Disney.
gaps got filled, and now we're off to the races.
Can we go back to Apple, John?
We're good?
I mean, I think that all of those charts you present nice risk rewards. Like if you want to be long against those lows, if you want to put on a risk reversal,
What do you think
like
of this?
sell naked puts.
What do you think of Apple? Struggled at 179, then struggled at 175, just now struggled at 172. Like it seems to be it seems to have lower highs on each of these big, and these are big rallies.
But it's making new relative highs all time.
That's true relative to the S&P. That's true.
Still?
Is that enough?
Is what enough?
Is it enough to be overweight a stock because it's making highs relative to the S&P? Is that good enough?
No, it's not good enough. I think that Apple is if we are now entering year 3 of a bull market after that consolidation, if that's in fact the case, I would argue Apple's probably going to underperform in that environment. Technology is probably going to underperform in that environment. Interest rates are going up. I think the outperformance is going to come out of industrials, energy, some of the materials, ex-gold miners and all that stuff, some of the chemicals. I would be looking there. Not
Like
so much Apple.
Like this could be dead money in a rally. People forget that.
Yeah.
It's huge, so it would be unlikely for it to go down, but it could also do nothing.
Or
It's always a third
underperform,
option.
go up slower, underperform. I think that would be perfectly normal.
I think that could definitely happen.
Yeah.
You have any more charts?
Nah, we're done. It's enough.
So yes, to your point, I like what you did there. You had sort of gaps that were filled on this right now, and no, not all gaps need to be filled. But in this case, when these gaps
60% of the time. It works every time.
Yeah, right. They're filling their gaps. You have key levels to trade off of. If you want to trade against those lows, that makes a lot of sense to me. If you want to sell naked puts against those lows, that makes sense to me. If you want to put on a risk reversal, that makes sense. If you take out those lows, all those bets are off. You unwind the trades immediately.
I agree.
If that's not the case.
Risk reward is definitely good to the long side. All these stocks closed green today after opening down very, very much lower.
Hammers.
Yeah.
Hanging men would be a bullish. This would be like a hammer because the Japanese say they're hammering at the bottom.
I like it.
There's also a lot of people that will have to chase a rally in like week 3 because just positioning is still not great. Like for, not set up for that.
Year 3, you mean?
No. Like if we get a sustainable rally here and it continues, there'll be a lot of people that have to come in later higher.
JC, do we want to talk about that breath thrust thing you did or are we done?
We can talk about breath thrust. Yeah, hell yeah.
So Josh and I were having a debate. It wasn't a debate, but there's this guy, Quantifiable Edge, a quantifiable trader, that did this thing showing that less than 15% of S&P 500 stocks were above their 50-day moving average. That went to 90% in a 50-day window. Obviously, that means you're washed out, super breath thrust, super bullish, right? Okay. But then we had S&P hit a 50-day low in like 20 sessions, something like that. So it was a breath thrust and then a sharp retracement. And there's not a ton of that in history, but typically that's pretty bullish. Do you have any thoughts on the breath thrust and the validation?
So for me, it's less about the specific breath thrust, like in this case, 50-day, whatever. You have the Marty Zweig breath thrust, you have the new highs list expanding, all of those things. For me, it's less about whether it's what specific thrust, momentum thrust, what specifically happened, and more so, are you getting a bunch of them or not? And when you do get a bunch of them, those are second inning indicators. Those are top of the third, bottom of the second. They're not going to be pre-bull market, right? Obviously mathematically, right? Pre-bull market, you get washout sentiment levels, washout breath levels.
And we had all those.
You had all of those, right? So those are the things you tend to see before the market bottoms. We did see those. So if the market bottomed, you had the stuff you see before, you have the stuff you see in the second inning. So if we're going to go on to the third and fourth and fifth innings, which is where the sector rotation comes in, further breadth expansion, right? You're not getting new 52-week highs expanding because we're so far from new 52-week highs. You're getting spikes in 21-day highs, spikes in 63-day highs that we haven't seen in a year and a half.
And to your earlier point, first they have to stop going down.
Right.
I would argue they haven't stopped going down yet.
Which ones? Because you could probably name them on one hand.
Yeah, but they're rolling again. It's tough.
Well, almost none of them are making new lows. So none of them are.
No, we're way off those lows from.
Oh, you know what we haven't spoken about? Now there's much to say, but these pieces of junk, the cruise lines, like Carnival is right at the lows. Carnival looks like Facebook for whatever reason.
Who goes on a cruise?
No, nobody.
Ugh,
you must be kidding.
Could you imagine?
No.
Ugh,
I would.
I can't.
Where are you going on a cruise?
I've never been.
I can't do it.
Don't do a cruise.
Don't do
Pick
it.
a place and go there.
Yeah, it's not for me.
Yeah.
Last thing, this lawsuit against Michael Saylor. What is this about? I mean, obviously, they're saying that he lives in D.C. but doesn't pay taxes there, and they seem to have wanted to do this in a very public way. Do you think they were trying to communicate with him privately and he was just blowing them off? Because he is kind of like a crypto libertarian.
So the D.C. Attorney General tweeted, "Today we're suing Michael Saylor, a billionaire tech executive who has lived in the district for more than a decade but has never paid any D.C. income taxes for tax fraud. We're also suing his company, MicroStrategy, for conspiring to help him evade taxes he legally owes on hundreds of millions of dollars he's earned while living in D.C."
So
That's wild.
Is the Bitcoin part of the tax evasion, or it's just like a coincidence that
I don't think so.
Well, they're suing MicroStrategy.
But I don't think...
What does MicroStrategy do besides buy Bitcoin?
I don't know that... I think that he's a libertarian guy. I don't think he likes paying taxes.
I think they're a software stock.
I don't know what that has to do with Bitcoin.
Well...
Like 200 million of it is software.
Yeah. They have this underlying software business that is not the reason why anyone's trading the stock anymore. Most of this is Bitcoin. I don't know. I feel like it's weird that the guy that's the biggest proponent of Bitcoin
is not paying taxes. That's not weird at all.
I guess it's not. No, that they're trying to make such a public example of him. I would imagine there are tax cases all the time. Most of them aren't tweeted by an attorney general.
Think of something less surprising.
They're probably no coiners, and they're just a little Zell of the coiners.
Or this is such a huge dollar amount that they can really make an example out of somebody that's flouting the law. I don't know.
So anyway,
did he respond?
I don't know.
Did you see how they figured out that he was there long periods of time despite claiming to not live there?
Chipotle receipts?
He has multiple yachts docked in Georgetown throughout the year, and multiple.
I have that problem all the time.
Wait, what does that prove?
They're saying they're using that as part of their argument that they know he's there more than he's saying he is.
So he's saying he's there less than 6 months,
Yeah.
therefore does not owe DC. What jurisdiction is he paying taxes to?
Maybe Florida.
Would you
or
call-
What if
Virginia?
he takes the yacht out and sleeps in the yacht on the ocean? He's not in D.C.
Would you call Apple a store value?
Dude, they don't screw around with that stuff. Pretending you live in one state,
Yeah.
they really don't screw around with that stuff. Like all these people that are like, oh, I'm going to get a second residence in Florida. What do I want to pay the taxes for? It's like, dude, you better like move your utility bills there and like really set that up. You can't just own an apartment, not live there, and say that you live in Florida. They
Right.
don't. They do not screw around with that sort of thing. New York State does not. New York State's watching its tax base flee the state as it is.
Store value is a dumb term. That's my final.
All right, so you're with me then.
It's just a dumb term. I'm bullish on
No, but
Bitcoin
you're, like,
long term, but I
calling
would
me-
never.
No, but you're
I would
like
never say it's a
saying-
store value.
But
It
you're
is
saying
a
erroneous.
it is-
It's not erroneous. I'm saying literally by definition something
I
with this
agree.
level of volatility.
I agree.
Unless
I
words have
agree.
no meaning at all.
I do agree.
It is a store of value. It
No,
is
it's
not
not.
the
Very
store of value.
Poorly
It's not a
functioning store of value.
Fine.
It's a speculative asset,
Fine.
like everything else.
It's a store of value that is too volatile for Josh. Great.
No, it's a speculative asset.
Come on. There's
Fine.
gotta be,
Yeah, it's not a store of
If
value.
we're saying something's a store of value, there has to be like an upside
Is
limit to how
reason- hold on,
volatile.
hold on.
T-Mobile is
The
T-Mobile
reason-
a store value?
No, because there's an underlying business. Just like
What?
any stocks. Bitcoin's not a
No,
business.
no.
What do you mean?
Come on.
My point is there's nothing to it. It's like gold. It doesn't do anything. It's just a rock. Bitcoin doesn't do anything. It's just a digital coin. Like you can't do anything. You can't build anything. It's literally just a store of
But that
value.
doesn't make something a store of value. I don't do anything.
My
I'm
point
like a
is-
rock.
my point
Am
is-
I a store of value?
My point is all of these things are store of, that's all that it is. It doesn't do anything else. That's my point.
How about this? If you want to
It
call
doesn't
it,
do anything else.
if you say I'm investing in Bitcoin because it's a store of
Dude.
value, fine, say whatever you want. But don't tell me
This
it's a
has
store of
nothing
value.
to do with investing.
Dude, I take
This has-
hold on.
this has nothing
what?
to do with
Hold-
investing.
What are we
Hold
talking
on.
about here?
Hold on.
I feel like this show's over.
Hold
the show's
on.
over.
I wade knee deep into a river. I pick up a gigantic rock. I say, JC, this doesn't do anything. It's not a business. It doesn't move. It doesn't have cash flow.
Right.
It's a store of value.
Right.
You're like, yeah, you're right. Probably is.
Well, if it's a diamond, then yes.
no,
it depends
it's
on
not
the
a
rock.
diamond. It's a friggin' stone.
Okay, but nobody else cares about that stone unless it's a diamond, and in which case the diamond is a store of value. It doesn't do anything.
This
It's
is
not
so
a
dumb.
company.
do
This is
something.
so
It's
dumb.
used in
Duncan, wrap it
jewelry.
up. Duncan, wrap it up.
We've been having way dumber
this is
conversations
very
for a long
dumb.
time.
This is
Okay,
very
the
dumb.
diamond does something.
This
Can
is
we
very
all?
dumb.
All right, favorites, and then we're going for dinner.
Oh, wait a minute. We spoke about this briefly. You said you're like involved in industry. What episode are you on?
I think I'm on season 1, episode 7.
What?
No, I'm not in as far as you.
Oh, I thought
well,
you
it's
were
only been 2 seasons.
I thought
right?
you were on season 2.
What are you
No.
talking about?
Oh,
Industry. You watch the show?
it's good.
It's good.
What's it
it's
about?
like a British investment bank. I think it's supposed to be Barclays, and
It's first year investment bankers.
but it's like kids like getting their first job there.
yeah.
And then the adults who supervise them, and
It's
there's
super.
like-
It's super graphic and
yeah, it's
drugs
like,
and
it's
sex.
it's
and-
HBO. It's
yeah,
intense.
Yeah,
but
All
you,
right.
it's a lot.
you'd be into it.
It's a
All
lot.
right.
There's
It's
a little
lot.
bit of trading. There's a little bit of
It's a
market
lot.
stuff.
All right.
It's good.
They're going for like realism. It's not like jokey, plots like zany, trading.
No, it's real.
stuff
It's real.
plots.
It's good.
All right. Favorites. Michael, you go first. What do you got?
No, you go first.
Okay. Speaking of Meb Faber, he did this really great podcast episode with Rob Arnott and Cam Harvey, specifically about the yield curve. And Cam Harvey's like the godfather of the yield curve indicator. So he's basically like the first person in the 1980s to identify that pattern in the yield curve and what happens after. And there had been 4 recessions caused by it up until then. Obviously, it's 30-something years later, and there have now been 9 or 10. And they have a really great debate about how it's being looked at, how it's being abused in the media, et cetera. And Meb does a great job. And Meb will be at Future Proof. So shouts to Meb. Also, I'm sure you heard the new DJ Khaled.
I saw a little bit of it. I haven't seen the whole
All
thing.
right, I won't ruin it for you, but the Jay-Z appearance on track 2 is probably going to go down in history as one of like the most legendary things
right.
he's ever done.
I saw it on the Spotify. I got to check it out.
They got Jay-Z, Rick Ross,
Nice.
and on one track, and Jay-Z just goes crazy. And the whole record's good. So highly recommend. God Did by DJ Khaled. If you've been living under a rock, you haven't seen this, but it's one of the. I think it's better than anything Khaled's put out in years. So anyway, all right, that's what I got.
What do you got? What are you watching? Anything good?
Football season starting this weekend. Nothing gets me more stoked.
Yeah.
You know, historically speaking.
Wait, do you mean college football?
Yeah, the best kind of football is college football.
You like
Starts this
college
weekend.
football more than you like the NFL?
Obviously.
Or you guys?
He's a Canes fan.
Yeah, only people in the Northeast don't get that. The rest of the country knows.
Also,
that college
your
football's
pro
better.
team has been the Dolphins all these years. So
Yeah, but even if it doesn't matter who my pro team was. In the
That's true.
Northeast, people just don't
That's
care
true.
about college
That's
football.
true.
The rest of the
we have
country
no teams
does.
here. We have no teams here. We have
No, I get why.
if you lived in Green Bay, though, you wouldn't be going crazy over Badgers football. You'd be a Packers
What
fan.
do you mean? Unless
No,
I went
what-
to
yeah,
Wisconsin, of
Wisconsin's
course.
big.
Yeah, what are you talking about?
All
Hell
right,
yeah.
all right.
Of course.
We'll
Are you
give it
kidding
to you.
me?
We'll give it to you.
Come on. Yeah. So football season. So the Miami Hurricanes got the best quarterback in the country from Connecticut. And we've got, and the Miami Dolphins. So we have a quarterback for the Hurricanes, Van Dyke, and for the Dolphins. We have a quarterback, and the Dolphins and the Hurricanes, we're not used to having good quarterbacks. And now both teams do. Right. So I'm pretty stoked about that.
What's
I got
what's Dolphins' record going to be this year?
5 and 12.
12 and 5.
12 and 5.
5 and 12. 5 and 12.
Is that based on
Actually,
their,
no, no, they can be better.
12
I don't know what their schedule looks like.
By the way, Tua
7 and 10.
is 3-0 against Belichick, FYI. And he's the most accurate passer in the NFL.
Stop. Cut his mic.
And we have,
Stop.
and we've got the
Stop.
weapons.
Stop.
As long as the awesome.
Most
You know where-
accurate
you know
quarterback.
where
Dude,
Tua is really
he's got
unpopular?
a noodle. He has a noodle on. What are you talking about?
Nobody drafts this guy.
We do not
for,
have-
He's
fantasy.
very good at throwing 7-yard crossing. Yeah.
People still play fantasy? Is that
Oh
still
yeah.
a thing?
Nobody will draft this guy on a fantasy team.
Who, Tua?
Yeah.
Okay, don't.
No, I'm just saying. Doesn't matter. It
He's
doesn't
going
really
to
mean
throw
that
like
much, but-
5-yard slants to the wide receivers that are
Tyreek.
going to run for 80, and he's going to get all 80 yards.
So
for,
there's
so.
2 good documentaries on
Bet against that
on
if you want.
Netflix. Wait, is one of them on HBO? One is on Tim Donaghy. I haven't finished it. On the ref that was
Yeah,
like
sure.
f***ing shit up in the NBA, just
yeah.
totally throwing games. And the other one, they did one on N1. Remember that? Remember what N1, the remix tape, like the street tapes? Of,
Yeah,
like,
yeah.
Yeah.
I saw that one. That was great.
I don't know whatever happened. I remember N1 just like disappeared or it just like died. I don't know what if it just ran its course,
I
but
think they started making clothes and
they did.
shoes.
No, I wore the sneakers. They sucked.
but it got like shitty.
No, because after like 4 seasons, it's like, all right, we got it. Same stuff over.
No, but the
it's
other
good.
thing that happened with that always happens with everything, when it was like something that was cool and you had to kind of like be in the community that it was coming out of, and that gave it cachet. And then when it was like shitty $12 sweatpants at every like mall in America, it loses the cool factor.
Oh yeah,
and
they
you
were
can't really
definitely
recapture it.
like
They milked it.
they were like TJ Maxx $12 shorts.
Because it started out as like underground VHS tapes
Yeah.
being exchanged.
And this
of
is before
like
YouTube.
the illest
It was before YouTube.
dribblers,
Remember Ray for
dunkers.
Alston?
Yes,
Skip to my Lou.
Yeah, of course.
Yeah.
And then it was Hot Sauce.
Yeah.
all those guys.
Right, there was no YouTube, and these are clips it's the equivalent of going viral
It was
in the
very cool.
VHS
It
era.
was very cool.
Yeah,
It was
yeah.
very cool.
But then they cashed in, and they made it corny, and then these things
Ran
ran
its
their
course.
Great
Well-
doc though.
Hold on. So one more. Mickey Mantle rookie card just went for $12 million. The original NFT. Making moves.
That was like
Did that go to a single buyer?
Yeah.
that was by far the biggest sale. I thought the Honus Wagner went for like 9 or something.
Yeah, this was more than the Honda Swagger.
like by a lot.
Yeah.
Do we know who bought or sold it?
Probably
We
can
know.
find
No,
it.
you know the seller. The seller owned it since like 1980. He bought it for $50,000, or maybe 1990.
Wow.
Oh my god.
Oh wait, did I make that up?
Was it King Griffin that bought it?
No, he wouldn't
Stop
dare.
it, Duncan.
Stop stirring up trouble.
I like that, Duncan. I like Duncan stepping in there. I saw that's funny.
But the bidder it's like a silent bidder.
Yeah, he bought it in 1990. I was right. He bought it in 1991 for $50,000. It's Anthony Giordano, a waste management businessman from New Jersey.
Anthony Giordano bought for $12 million.
He was waste management. No, he was a seller. He bought it in 1991 for $50,000.
Okay. All right. I'm waiting to see like one of these DAOs buy a card for like crazy money, like one of these groups of people.
yeah.
I feel like that's what's going to come next.
Yeah, like a rally road
And
through a
went to
DAO.
an anonymous buyer. Anonymous buyer. So it could be King Griffin.
All right. Hey, did you have fun?
Always. I'm ready to eat.
Yeah,
though.
that was
I'm
fun.
hungry.
You hungry?
I'm
Hell
starving.
yeah, dude.
Yeah.
What are you gonna
How
eat?
many? We have a lot of bleeps to do. Oh, let me see this. Throw this.
There's
How
a
many
lot.
f***s are you allowed to have in one episode?
Well, you just took our last one. All right. Listen up.
That is awesome.
New in the merch store, the compound store, idon'tshop.com. You guys asked for this. You guys
That is,
Wow,
that is a
look
really,
at
That's a
that.
good one.
Chart on, John. Look at this.
Wow, that's
really
really
good.
nice.
So for those of you who have heard Michael or Ben or me or any of our guests say chart on, finally we did the shirt for you guys. This is available now,
It is.
and look at this material.
It's premium.
So this is the premium T-shirt. We didn't screw around with this one. Really nice design, and I think this is going to be a big seller.
We have any fun
All right,
reviews?
here,
Do I get one?
that's yours.
Hell yeah.
If it's the wrong size, I'll get you the right size. What is that?
I wear extra small. This is double XL. It's too big.
Too big?
Yeah.
Okay. Are you sure?
Double XL? Dude, I'll be swimming in that shit.
Are you sure?
All right, we'll get you an XL. Order JC an XL. All right, guys, thanks so much for listening this week. We love you. We miss you when we're not here. We're going to be back next Tuesday after Labor Day. So everyone have a great weekend. Enjoy the holiday. Enjoy the end of summer. Thanks to JC. Check out allstarcharts.com. And remember, ironshop.com for the latest in financial blogger fashion and apparel. What is that?
Me yelling at JC.
Oh, it's beautiful. It's a beautiful thing. All right, good night, guys. Thank you.